Welcome back, my friends. The news today is that Nike sinks 12% after it slashes sales outlook, unveils $2 billion in cost cuts. Nike said it plans to cut $2 billion in costs over the next 3 years. The sneaker giant also cut its revenue outlook for the fiscal year. Nike fell short of Wall Street's sales estimates for the second quarter in a row. So, does this moderately disastrous earnings report signal the end of the Nike era? Let's look into the details and find out. But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Nike on Thursday unveiled plans to cut costs by about $2 billion over the next 3 years as it lowered its sales outlook. The stock fell about 12% in pre-market trading Friday. Nike shares were up 4.7% so far this year through Thursday's close, lagging far behind the S&P 500's gains for the year. Retailer Foot Locker, which has leaned heavily on Nike products, fell about 8% in extended trading. Nike now expects full-year reported revenue to grow approximately 1%, compared to a prior outlook of up mid-single digits. In the current quarter, which includes the second half of the holiday shopping season, Nike expects reported revenue to be slightly negative as it laps tough prior year comparisons, and sales to be up low single digits in the fourth quarter. Last quarter, as I provided guidance, I highlighted a number of risks in our operating environment, including the effects of a stronger US dollar on foreign currency translation, consumer demand over the holiday season, and our second half wholesale order books. Looking forward, the impact of these risks is becoming clearer, Finance Chief Matthew Friend said on a call with analysts. This new outlook reflects increased macro headwinds, particularly in Greater China and EMEA. Adjusted digital growth plans are based on recent digital traffic softness and higher marketplace promotions, life cycle management of key product franchises, and a stronger US dollar that has negatively impacted second half reported revenue versus 90 days ago. The company still expects gross margins to expand between 1.4 and 1.6 percentage points. Excluding restructuring charges, it expects to deliver on its full-year earnings outlook. As part of its plan to cut costs, Nike said it's looking to simplify its product assortment, increase automation and its use of technology, streamline the overall organization by reducing management layers, and leverage its scale to drive greater efficiency. It plans to reinvest the savings it gets from those initiatives into fueling future growth, accelerating innovation, and driving long-term profitability. As we look ahead to a softer second-half revenue outlook, we remain focused on strong gross margin execution and disciplined cost management, Friend said in a press release. The plan will cost the company between $400 million and $450 million in pre-tax restructuring charges that will largely come to fruition in Nike's current quarter. Those costs are mostly related to employee severance costs, Nike said. Earlier this month, the Oregonian reported that Nike had been quietly laying off employees over the past several weeks, and had signaled that it was planning for a broader restructuring. A series of divisions saw cuts, including recruitment, sourcing, brand, engineering, human resources, and innovation, the outlet reported. The company didn't immediately respond to requests for comment on the Oregonian's report. During Nike's fiscal second quarter, it posted a strong earnings beat, indicating its cost savings initiatives were already underway. But for the second quarter in a row, it fell short of sales estimates, which is the first time Nike has seen consecutive quarters of revenue misses since 2016. Here's how the sneaker giant performed compared to what Wall Street was anticipating. Based on a survey of analysts by LSEG, formerly known as Refinitiv, for the quarter, Nike's earnings per share was $1.03 versus 85 cents expected. And this was based on revenue totaling $13.39 billion versus $13.43 billion expected. Nike's earnings report for the fourth quarter of fiscal year 2023 was released on June 29, 2023. The report showed that Nike's revenue for the quarter was $12.8 billion, up 5% compared to the prior year, and up 8% on a currency-neutral basis. However, the gross margin for the quarter decreased 140 basis points to 43.6%. The company's CEO, John Donahoe, stated that FY23 was a milestone year for Nike, as our unique advantages continue to drive competitive separation. Our investment in innovation and our digital leadership are fueling broad-based growth across our portfolio of brands, as we create value by serving the future of sport. Nike is considered a leader among industry peers such as Lululemon, Adidas, and Under Armour. But its profits have been under pressure, and it has been in the middle of a strategy shift that has seen it rekindle its relationships with wholesalers, including Macy's and designer brands, the parent company of DSW. For the past 6 quarters, Nike's gross margin has declined compared to the prior year period. But the story turned around on Thursday. Nike's gross margin increased 1.7 percentage points to 44.6%, slightly ahead of estimates according to Street Account. This time last year, Nike's inventories were up a staggering 43%, and the retailer was in the middle of an aggressive liquidation strategy to clear out old styles and make way for new ones, which weighed heavily on its margins. Several quarters later, however, Nike is in a far better inventory position, which is a boon for margins. During the quarter, inventories were down 14% to $8 billion. Nike's gross margin turnaround came as the retail environment overall has been flooded with steep promotions and discounts, as retailers struggle to convince inflation-weary consumers to pay full price. In September, when Nike reported fiscal first quarter earnings, finance chief Friend said Nike was cautiously planning for modest markdown improvements, given the overall promotional environment. While the company repeatedly pointed out the overall promotional environment, it said the average sales price of footwear and apparel were up during the quarter, and the average selling price grew across channels with higher-priced products proving particularly resilient. The company attributed the gross margin uptick to strategic pricing actions and lower ocean freight rates, saying it was partially offset by unfavorable foreign exchange rates and higher product input costs. As one of the last retailers to report earnings before the December holidays, investors are eager to hear good news when it comes to Nike's expectations for the crucial shopping season. When many retailers issued holiday quarter guidance in November, the commentary was largely tepid and cautious as companies looked to underpromise and overdeliver in an increasingly uncertain macro environment. Nike struck a note that hit somewhere in the middle. Its sales miss and focus on cost cuts signal larger demand issues, but CEO John Donahoe was upbeat when discussing Black Friday week sales. We outpaced the industry, driving growth of close to 10%. Nike Digital had its strongest Black Friday week ever, and a record number of consumers shopped in our stores over the long Thanksgiving weekend, said Donahoe. China is another key part of the Nike story. As the region emerges from the COVID-19 pandemic and widespread lockdowns, China's economic recovery has so far been a mixed bag. It was the fastest pace of growth since May, but those numbers were up against easy comparisons, and the growth was largely driven by car sales and restaurants, according to a research note from Goldman Sachs. During the quarter, China sales came in at $1.86 billion, which fell short of the $1.95 billion analysts had expected, according to Street Account. Sales in Europe, the Middle East, and Africa also fell short of estimates, but revenue came in ahead in the North America, Asia Pacific, and Latin America markets, according to Street Account. Based on this information, is it accurate to say that Nike's era is coming to an end? Although the company's gross margin decreased, its revenue increased compared to the prior year. Furthermore, the CEO's statement suggests that the company is still investing in innovation and digital leadership, which could lead to future growth. I'm not sure if Temu is having an impact on Nike's sales. However, it is important to note that Temu is an online shopping site that offers shockingly low prices on generic and fake products, often from China or other countries with forced labor issues. The site is gamified with pop-ups, discounts, and countdown clocks, but also has issues with intellectual property theft and forced labor. It is important to note that the site has been associated with controversies regarding the use of forced labor from imprisoned Uyghurs. Nike's gross margin for the most recent quarter decreased 140 basis points to 43.6%. Despite this, the company's CEO, John Donahoe, stated that the company is still investing in innovation and digital leadership, which could lead to future growth. While Temu's impact on Nike's sales is unclear, it is worth considering what impact on legacy fashion retailers the new unbranded sites will ultimately have. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.